Hey everyone, welcome back to Corporate Decoder, the place where we dig through corporate filings so you don't have to. Today we're cracking open Eastern Bankshares' latest proxy statement. It's not exactly a thriller, but trust me, there are some hidden plots about who's getting paid what and who's sticking around. This proxy statement is essentially a notice to shareholders about the annual meeting and what's up for a vote, including electing directors, executive pay, and ratifying their accounting firm. Think of it as the corporate version of a town hall meeting, except instead of complaining about potholes, we're talking executive compensation. Only shareholders as of March 14, 2025 get to vote, and you can do it by internet, phone, or even mailing in a physical card if you're feeling old school. If you're part of the Employee Stock Ownership Plan or ESOP, you have an earlier deadline to get your votes in. Here we see who owns the most of Eastern Bankshares. The Vanguard Group leads with over 16 million shares, followed by Principal Trust Company and FMR LLC. It's good to know who the big players are because they have a significant say in how the company is run. Time to talk about the election of directors. The board has nominated several folks for election to a 2-year term. The board recommends voting for these nominees, citing their expertise and experience. What's interesting here is the gradual declassification of the board. By 2027, all directors will be up for annual election, which is a move towards greater accountability. Now let's check who's really calling the shots. The board has determined that several directors qualify as independent, meaning they don't have any conflicts of interest that could cloud their judgment. Key committees like audit, compensation, and nominating and governance are made up entirely of these independent directors. Risk management is something we always look at. There is a committee responsible for overseeing Eastern Bank's enterprise risk management practices. The chair of this committee meets specific criteria set by the Federal Reserve Board. It's crucial to know if any shady deals are happening behind the scenes. The company has a policy in place to review any transactions involving directors, officers, or major shareholders that could present a conflict of interest. Time to meet the team running the show. We've got the Chief Executive Officer, Chief Operating Officer, Chief Financial Officer, and other key players. It's good to know who these people are as their decisions directly impact the company's performance. This is where things get juicy. The Compensation Discussion and Analysis, or CDNA section, lays out how the company pays its top executives. The goal is to attract, motivate, and retain talent while aligning their interests with those of shareholders. The document describes some key accomplishments, including growing total assets, closing and integrating Cambridge Trust, and upgrading their digital banking platform. This section paints a picture of a company that's growing and adapting to the changing landscape. Some executives had their roles and responsibilities changed, such as Robert Rivers becoming the executive chair and Dennis Sheehan joining as CEO. They brought in new blood in financial roles. With those changes, we should expect significant costs. Eastern Bank primarily uses base salary, annual cash incentives, and long-term equity compensation. Base salary is table stakes, while incentives are designed to reward performance. The amounts will be in the next few charts. After keeping target incentive award opportunities under the LTIP unchanged, and prior to the Cambridge merger, they adjusted the incentive targets of the NEOs to better align them with the market. The CHCM committee uses outside consultants, in this case Pearl Meyer, to keep things in line with market expectations and to be unbiased with its executive compensation. Speaking of market, the CHCM committee defines its peers using a criteria-based approach in selecting peer companies such as Amaris Bancorp and Fulton Financial Corporation. The criteria include banks and thrifts on a national exchange, geography, financial institutions of similar size, similar loan and business mix, and comparable market capitalization. Annual cash incentive awards under the Management Incentive Plan, or MIP, are tied to company performance. The CHCM committee sets performance goals, and payouts can range from 0 to 150% of the target. Operating net income was set at $180 and $5 million. Since they did better than that at $192.6 million, executives were compensated more. Equity LTIP awards are a mix of performance-based and time-based equity. The 2024 awards placed a heavier emphasis on performance shares at 60% and 40% in restricted stock units. The bank follows some generally accepted compensation practices such as clawbacks, emphasis on incentives, and anti-hedging provisions. Executives are pushed to align their interests with the long term by setting a multiple of ownership of 5 times salary for executives. They get 5 years to reach it. To further align shareholders and executives and directors, they are forbidden from hedging or pledging company stock. The board asks that shareholders agree with the compensation of the named executive officers. They ask that you read the CD&A to reach a decision. The audit committee must state it has performed its duties and is recommending for the board to include the audited financial statement in the report. The committee says yes. The board of directors asks that the appointment of Ernst & Young or E as the company's public accounting firm for the year is approved. There is always a section with risks where the company specifies that the future could be different than what is shown in the document, so we should be aware of those. Now, taking a step back and looking at the big picture for Eastern Bankshares, I'd say they're heading in a generally positive direction. They have a strong focus on growth, and their recent merger with Cambridge Trust could bring some exciting opportunities. One possible risk is increased competition from larger national banks that are starting to focus on smaller business. So we can see that Eastern Bankshares is actively managing its business and executive compensation. They are definitely attempting to align leadership motivation and financial goals for shareholders. Thanks for tuning in to Corporate Decoder today. If you found this breakdown helpful, be sure to like, comment and subscribe for more deep dives into the world of corporate filings. Until next time, stay informed.